These are the stock picks for the week of September 14, 2015. I am including a few penny stocks in here so everyone can play. We're going to start with going to stockcharts.com and typing in one of our picks. So we're going to start with Kiri. And what we want to look at is, because we're swing trading, we want to look at shorter moving averages. We're also going to want to look at the Arun lines because they represent strong buying signals. And finally, we want to look at slow stochastics because they can give us insight as to whether a stock is overbought or oversold. Alright, so here's what we got with Kiri. The red Arun line was in the 70 region, but it started to go down after that, so we don't have any real reason to believe that this is a short signal. The moving averages have crossed, which is usually a buying signal, but if you see how the red one is above, that means that the longer of the two moving averages is the higher, and therefore we actually have a selling signal. Down here, we've got the MACD line, which has dropped below zero, indicating that we've lost a bit of our momentum that we had before. You can see that the black line is turning upward, which means that it's very possible that we get back into an upward trend. Likewise, the stochastics, while not under the 20 level, are showing a kind of pseudo buying signal because the black line is tilted upward and is about to cross over the red line. What I'm thinking is that this is probably a bear trap we're seeing, and that the stock is probably going to go up overall. And based on the trades on Friday, we saw a lot of buying and a high volume. So perhaps a news event has occurred that has influenced investors to get in on this stock, and we would be reversing that seemingly downward trend. So we'd have a bullish trend in place after this. So this is a bit of a risk because whenever you play a bear trap, you want to put a stop loss if you're risk averse. So make sure you put a stop loss for this one in case I'm wrong and we actually do have a bearish momentum in place. Put your stop loss at somewhere around 1.7. That's Kiri. Next we're going to look at AEM. And a lot of these are, take a look at the put to call ratio overall. Generally, when it's above 1, it means that more people have negative sentiment on the market, and they're hedging against the market with put options. And you can see that that has been growing since August 10th or around that date. So now is a good time if we're buying stocks, and when I make these stock pick videos, I only point out stocks to buy. I don't want to make it too complicated for anybody. So what we're really looking at is some swing trading stocks that would also be good for hedging in the long term. And a lot of mining companies are like that. Because if gold goes up, the mining companies will go up usually more quickly than gold goes up. So we're going to look at a few mining companies here that look like they might swing upward in the next week and possibly are good to hold on to in your portfolio for hedging. Let's take a look at this. Actually, all of these mining companies, AEM here, all of these mining companies are going to look pretty similar, irrelevant of what they are mining for. This one's a gold miner. But what you'll see here is that all the signs point to bearish, except for this moving average, which has come above the red line, but is now tilting down and might cross again. But most importantly, I believe a lot of these mining companies are actually oversold. They probably hit a low and are posed to bounce back. And when you look at the stochastics, if you see the lines crossing, the black one about to cross above the red one under the 20 line, that's usually a very strong buying signal. Okay, so that's AEM, and you'll see the other mining stocks are actually pretty similar. NEM, I believe this is a copper and gold miner. Yeah, pretty similar. We see that the black stochastic line, the fast line, is crossing above the slow line, and after this can be considered a buying signal, or you can wait until it hits 20 and then buy. But you can see we had a bit more buying, and that could be investors hedging against a bear market by basically putting their money into gold. That's NEM. Let's move on to FPP. So this is actually a oil miner. And yeah, why would we be playing oil at this time? Well, like the other miners, I believe that pretty much every miner is oversold at this point. We've hit a low for commodities, at least a relative low, and I believe it'll bounce back in the next week. But for the long term, it's really not certain. I wouldn't really hold on to these for the long term unless you want them as hedged stocks. So we see the same thing. Oversold, black line's about to cross above the red line, about to hit 20 territory. The candlestick gives us a hammer pattern, which usually, not usually, but often indicates a bullish reversal. And then the last one is KBLB, which I don't know what they do. I don't really care, but we see some buying signals here. First of all, the red Arun line cross under the green Arun line. That's usually a buying signal. And then when the green Arun line hits 70, that's another pretty strong buying signal. So we've got two buying signals already with the Arun lines. We also see the blue moving average line is about to cross over the red one. We also see the MACD line heading up towards zero. If it surpasses zero and keeps moving upward, we will have momentum in the upward position in place. This doesn't tell us much here. But remember, this is a penny stock, so it can go up quickly, and if it does, you usually want to get out quickly unless it's a real good company, because a lot of those plays are pump and dumps. So that's it. I'm going to leave these 5 stocks up here for you, and if you have any questions, leave them in the comments section below.